So that timing, I think, is one of the biggest downfalls of the 1031 in today's cap rate compressed market. And the general assets that's for sale, there's, some of them barely cash flow with debt.
What's your biggest frustration when it comes to the 1031 exchange?
I think a lot of frustrations we've been involved in is that timing of how fast you need to deploy it. So a lot of operators that I've dealt with, it's it's very hard to put a 1031 into a fund model. I wish it was much easier, but there's a lot of there's a lot of things that have to be checked off. Borderline takes a lot of legal experience to make it happen. So I wish that was a more streamlined to get a 1031 into a fund, because I know a lot of operators that sold their properties, and they either sold a property that was cash flowing so well they shouldn't have sold it, but they did it because the market was so hot, and they've nearly ran out of time on that 1031 because they could not find an asset that was even subprime better than what they had. So that timing, I think, is one of the biggest downfalls of the 1031 in today's cap rate compressed market. And the general assets that's for sale, there's, some of them barely cash flow with debt. So you almost have to be 100% cash buyer. Being a cash buyer, you need to put debt on it right away to get that depreciation schedule. If you own it with cash, you're missing some tax advantages.
You got it. And I call it the shotgun wedding, right? You get
Yeah.
engaged in 45 days, you got to get married in 180. And oftentimes you're overpaying for a property that perhaps you wouldn't have bought if it wasn't for the tax liability that's about to burn a hole in your pocket there. Mm-hmm. And so we have a solution for that. It's called the Deferred Sales Trust. In fact, that's why we started the company, to give people an option beyond the 1031 exchange, and to think in an innovative, I call it the Netflix way of exit planning versus just 1031 blockbuster. And the cool thing though is, you mentioned you're not a crypto person, and that's cool. Totally cool, right? You're investing in your space, but there's a lot of crypto people out there that want to exit crypto. And so we just did a $5 million deal where she had bought crypto for 50,000, and she went to 50 million. And so you have this really big gain, Eddie, and they exited the 5 million into the trust and then invested it into a business venture, but it could have easily have been a real estate business venture. It happened to be a startup tech company, all tax deferred, right? And so the power of that, and my point of that is, if you could help the crypto people invest into commercial real estate, or even like a fund like yours, right? All tax deferred. I'd love to do that. Talk about the power of that, Eddie.
Right. So that would be something that I would need to learn quite a bit about. And I think that's one of the coolest things I love about the real estate and multifamily is the amount of people that have experience in other ways and are happy to help or educate you. And it all works together. It's a great big team in the end of the day.
Eddie, everything is possible. You just have to ask, how can it be done, right?
Exactly.
And so people can go to capitalgainstaxsolutions.com. You can look at the Deferred Sales Trust. By the way, we're coming out with our new book. It's Building a Tax Deferred Exit Strategy, and it's the proven playbook for unlocking your ideal wealth plan when selling assets of any kind for yourself or your clients. We have a person named Kevin Harrington from Shark Tank who will be in the book. It's just pretty cool, and you can learn more about that by going to capitalgainstaxsolutions.com. We also have our new mastermind. It's not really new. It's been going on for a while, but it's our Crypto DST Mastermind, and it's all about how to exit cryptocurrency, go into investment real estate, to go into some securities, get some diversification, and do this at what's called optimal timing, like Netflix, right? You can do it whenever you want, versus the old blockbuster way, which is 1031, which, by the way, doesn't work for anything except for investment real estate. It doesn't work for primary homes or business sales or crypto or stock or private equity or captive insurance. It doesn't work for any of those, whereas the Deferred Sales Trust works for all of those. And then you can go into real estate, passive or active. Again, go to capitalgainstaxsolutions.com.